Hi everyone, my name is Tabitha. Welcome to my YouTube channel. Today we are going to talk about purchases journal. What are purchases journal? A purchase journal is used to record all purchases of inventory, supplies, and other assets. Purchases journal is a set up to enable the bookkeeper to enter information from the vendor's invoice so that this data can be used later to post in a separate ledger's journal. That's the definition. What is the vendor or a supplier? A vendor or a supplier is a provider of goods and services. These people are the one where you buy the good from them and then you come and use them in your business or you sell them to other customers. These people called vendors, they send you a vendor's invoice. And this is the statement that outline the purchase of goods and services. It is not the receipt because most of the time these goods are bought on account. So it's not a receipt, it's a statement outlining the purchase of a good and a services. With all the details like the number of the item bought, the cost, taxes, payments, terms. For some invoices, they have a discount available if a certain conditions are met. Let's say, for example, you have been sent an invoice and you pay it within 10 days. So you get a 2% discount. And the whole of these things are called terms of sale. Like if a certain condition are met, the whole thing is term of sale. It could be 30 days or after 10 days. If you get a 2% discount and then you will use this term, if it is 30 days, you don't have no discount. The next thing is there are two types of purchases a company do. There is a merchandise acquired for sale. This will be covered in the next video. So these are goods that are bought for resale. The next thing is asset acquired for use in the business. This could be tables, chairs, or maybe a computer that is used for a business. Inside that business, it's not for resale. With these two types of purchases, the company have different form of purchases journal that look different. For this video, we will look at the assets acquired for use in a business. So how does the invoice look like and how does the purchase journal look like and what is different in that purchase journal from the one for the merchandising. So that is our main objective, to see the difference between the two purchases journal. Let's see what is next. There's an example here. Following is an invoice from an office product Inc. It is received by your company, which is XY Consumer Products. On the invoice, there are a supplier's name, the business number for goods and services, and then the company receiving the invoice name and the address. And if you had account number, and then they will also include it. The next part is what is on the invoice. What is on that invoice? So you have the invoice date, purchase date, you have the quantity sold, and then the government taxes, and then you have final amount due. And on that invoices too, you have the payment term. Sometimes it's written as end stroke 30, or maybe N2 stroke 10. Okay, so this one mean if you take the whole time that the supplier gave you to pay off that bill, but here if you paid early, like if you paid within 10 days, and then they give you 2% discount. The next thing is this notes. The Canadian companies apply goods and services tax, which are GST, about 7%. And if it is in British company, you have VAT will apply. We have provincial sales tax is applicable too, which is 8%. But it all depends on whether it's the merchandise or asset acquisition for use in a business. So let's see. So here is an invoice. This is the supplier's name, and then this is the supplier address. When you come to this side is the consumer or customer address. This is the term of payment. When you come down here, you have your invoice, the date when that purchases took place, and up here you have the date when the invoice was written. So you have the quantity, and then you have the item, which is in this case is office supply. This is the item bought for use in a business. And then here you have the price, and then you have the total. When you get the total, you get the price times the quantity. Get your subtotal, and then there's PC, PST, and then GST, and you get the total. This is the total of the invoice. Now let's see. You have received this one, and you are the accountant. You need to do journal entry, purchases journal. Here you record your purchase journal for the office supply. So office supply is an asset acquisition for use in a business. It's not for resale. So what you will do, you take the date of the invoice, not the day of the purchase, the day when the invoice was written or sent to your company. Here you write the vendor's name, and then the vendor's number, and you write your account payable, which is a credit. So account payable is the total, is that total amount of the invoice. Total invoice amount. The total invoice amount. That's the amount. You put it as account payable. Your company will pay it when their term of payment ends, or they have a choice of paying it within 10 days and get a 2% discount. Here we have purchases. On this column, you're not going to record anything because the item that you bought was for use, not for resale. So you leave it empty and you go to the GST. Now you record the amount of GST. Here is nothing. And then here you record the office supply. So the office supply is the amount of the total purchase. It's the purchases that you make, the total purchase. I don't know how to use the pen. That's okay. Plus the PST, which is the provincial sale tax. So that's how you get the total value of the office supply. And this is the main point. The assets you acquire was not for resale. It's for use in the business. So to get that total, to record under that assets as a debit, you will get the purchase amount and then add the PST, which is provincial sales tax, and that's how you record your purchase journal for asset acquisition for use in the business. The next thing, we will explain what we just did in purchase journal. Explanation for the purchase journal above. The first thing you do, you list the date of the invoice, which is January 10th, 2003. Not the date of the purchase. Then you enter the vendor's name, Office Product Inc., and the vendor's number from the vendor's list. Record the invoice total of 6103, the account in the account payable column, and then you can record the GST. Finally, you record the cost of office supply, which will be 5,306 plus the provincial sales tax. Amount of this is entered into a office supply column.